Korde in. He's a research analyst with Prabhudas Lilladher. He's joining us right now. Thanks very much, Rohan. Good having you with us here. Appreciate your time, Prashant, this side. We are talking about Tata Motors to begin with, Rohan. What's going on in your assessment? Is it all China?
In my assessment, Tata Motors is a good company from a long-term perspective. In the near-term perspective, because there's the rejigging portfolio happening at China, plus some pressure on demand in China operations, and the ramp-up on the XE is still in process. All those things are weighing heavy in the near term. But from a one-year perspective, there's no problem to hold on to Tata Motors, and it should continue to perform really well going forward. For the near term, that is the next couple of quarters, because the ramp up in China is still happening. They are just starting up with production. They had some inventory issues in the previous quarter, so those will weigh heavily in the near term. So few short term triggers, but good from a medium term and a long term perspective.
Fine. So what's happening? Just some little in detail. What's happening in the near term, and what will change in the in a 1 year plus kind of time horizon?
Yeah, so if we take the near-term perspective, starting with the India operations, the commercial vehicle segment recovery is ongoing. We are seeing better MNHCV sales, but the LCV sales will start picking up around the middle of the year from the lower base. And if the infra demand starts picking up, new orders start coming in from the fleet operators, then we are in for a really good FY17. If we move on to the international operations, which is mainly Jaguar Land Rover, they have really good products lined up for launch. Some of them have been launched, like the Discovery Sport. The XE has been launched, but it's in a ramp-up phase at this point of time. Similarly, the China production has commenced from the previous quarter, but there was an issue that the locally produced products would be priced cheaper than the imported products, so they had to sell off the older inventory at discounts. Secondly, they are working on ramping up on production at the local plant. So as and when they are sure about the quality of the products, and they are more confident that the product can meet all the internal checks and be able to deliver the performance that the products manufactured in UK are also able to give, they will be ramping up on production over there. Now there's no date that has been given on it, but we estimate that probably it will happen around September, October, that the production in China will be much higher, and so the volumes which are about flattish right now for JLR will start seeing a pickup around that period as well.
Right. No, you're saying that it's a production problem, not a demand problem in China. That's what you're saying, Rohan, right?
It's not a production problem, because you have got a new facility which is starting. You'd obviously be more careful in terms of how you ramp up on production. So it's a new plant at a new geography, so they are making sure that the product quality is fine. Demand, yes, the demand has also trailed off a bit in China, but since JLR is picking up from a very low base in China, it won't be impacting them as much as some of the other companies.
China is about what percentage of JLR sales? I mean, in terms of volume, revenues, and profits?
Yeah, in terms of volumes, it was 25%. In April, it was 21%. So the early 20s is likely to continue for the next few months.
Which is the biggest geography? The US, right?
No, China is the biggest geography. Till FY15, 25%.
Which are the other markets, the big markets then, after China?
Yeah, then China will be followed by US and UK, North America, that is.
And how are those two, US and UK, doing? I mean, and what are prospects like for JLR products there?
Prospects are much better. So both markets, as the new models keep getting launched, those prospects will keep on improving. So the outlook is really good, except for maybe a few geographies like Russia, where there are some other problems. I think the outlook is really good in most other geographies.
What is the for global investors who can, I mean, someone here who's handing over money to an Indian mutual fund manager doesn't have the option of buying other global luxury car makers, but foreign investors have that option. So I guess it's relevant to ask the question, and Tata Motors has been a favorite amongst FIIs as well. What are valuations at really? I mean, what do you pay for these luxury car makers?
Well, I don't cover the foreign car makers. I focus mainly on Tata Motors. So I have a buy recommendation on Tata Motors, and I do believe that valuations are favorable as compared to both the Indian companies as well as the international peers. But as you said, it's not a pure. There are no other pure luxury car manufacturers which are available. But I think JLR per se is forming most of the valuation for Tata Motors at this point of time, and given the growth trajectory that they have, despite the Indian business recovering, they'll be continuing to form more than 80% of the valuation for Tata Motors going forward as well.
What value do you ascribe to the Indian business, the commercial vehicles and the passenger car business?
So my target price is 615, of which the Indian business constitutes about 45 rupees. The other subsidiaries add about 30 rupees, and the rest is mainly Jaguar Land Rover.
Okay, all right. Yes, and you're just one more thing. There is the DVR out there as well, right? Now it's you don't have to cover the DVR separately. I mean, it's just some technical difference. Would people be better off buying the DVR or the stock itself?
Yeah, if you're a long-term investor with a dividend outlook, then the DVR makes more sense because you get high dividend on the DVR. And it's also a play on how the discount is playing out at any point of time.
And how is the discount moved? I mean, the discount stays, right? I mean, 450 on the stock and 280 odd on the DVR. So it hasn't exactly. There was a lot of talk that the discount would narrow, I think, year and a half back.
Yeah, so I mean, typically it is being staying around in the same range, around 40%. So if it widens, then you get an opportunity for the DVR. If it lowers, then that opportunity moves off.
Now, have you looked at what would make the discount disappear? I mean, at least from these large 40% kind of numbers.
I mean, no, I guess there's no precedent or any other comparable where you can say that discount should be at X percentage or Y percentage. So it's more down to the market moves and the investor appetite, whether they are keen on capital gains or more on a dividend discount model.
Okay, fair enough. Rohan, do you track Bajaj, Hero, etc.? I mean, the two-wheelers?
Yeah, I do.
Okay, I'd request you to just hold on. I'm taking a small detour. I'm just coming back to you. I want to get your thoughts on those names as well. I'm being told that we've got the Korde from Prabhudas Lilladher has been waiting, and we discussed Tata Motors with him. He thinks it's an attractive buy. He's got a price target, I think, of 600 plus. If I'm not mistaken, he thinks in the near term there could be issues. A year plus, if you've got that time horizon, it's a good buy. Now let's come to Hero MotoCorp and Bajaj. Rohan, what's your view? Between 35-45% of those companies' volumes come from rural India. And there has been a fair bit of concern expressed about what's happening to those markets. The stocks have been off, I mean, between 30-35% from their peaks for a while. They did see a run-up after results. I mean, actually, they sold off before results and saw some run-up after the results. But where do they stand? Are they good bets?
I think the four-wheeler sector is a better bet at this point of time than the two-wheeler sector. The two-wheeler companies are likely to be more range-bound. Now, what two-wheeler companies offer is a very strong balance sheet and good cash flow generation. But as you rightly pointed out, the outlook on the rural demand is a bit weak at this point of time. Since these companies have a lot of sales which go to the rural segment, they will be impacted adversely. We have been seeing their volumes trail off right from the beginning of this calendar year. Growth rates have been either marginally negative or marginally positive. So nothing exciting happening at this point of time. And I do believe that FY16 will be a kind of a low growth year for most of the two-wheeler companies. What will benefit them is a good monsoon, as it will the rest of the sector as well. But typically the buying decision will not happen immediately after the Kharif crop is monetized. It will probably start 1 or 2 months after that if the rainfall is adequate. So it's more of a wait and watch on the two-wheeler companies. The company with higher export exposure, which is Bajaj Auto, is likely to do better going into the latter part of the year. because their base on exports is lower, as some of the export markets had their own individual problems, including Nigeria and Egypt. So that base will benefit Bajaj, and they will be showing a higher growth rate, particularly in the second half of the year. But in the first half of the year, I do expect low single digit growth rate or a marginal decline to happen for most of them.
You track TVS, Rohan?
Yes.
And
So
the outlook is this.
The outlook is good, definitely, for TVS. They had the new scooter model which was doing really well. Even at this point of time, their growth rate is relatively higher than that of Bajaj and Hero. But we have to bear in mind that TVS is a relatively smaller player. If the demand doesn't pick up in early calendar 16, then TVS will also be suffering because the base will be higher for them. So it's going to be a wait and watch for the entire two-wheeler sector, and that's why overall as a sector I prefer the four-wheeler space rather than the two-wheeler space.
Okay. You have coverage on Eicher Motors by any chance?
Yes, I do.
Okay.
Eicher, it's a two-wheeler, but it's a bit different because they are into a more niche kind of segment. Plus, they have the comfort of a waiting period, which most other two-wheeler companies don't have. And they have the other side of the business, which is the commercial vehicle business, which is doing relatively better. And with the CV cycle recovery ongoing, we should be seeing the next 2 years benefit the subsidiary, that is Volvo Eicher Commercial Vehicles as well. So relatively they seem more balanced out of the overall two-wheeler companies, simply because of the four-wheeler exposure as well as the comfort of the waiting list.
You said you like four-wheelers over two-wheelers. You said that a few times. What is your view on Maruti, which has done, I mean, the stock's done phenomenally well?
Yeah, it continues to remain in my one of my top picks in the sector. I think all the positives are there. It's a matter of now getting the numbers out and delivering the performance on a monthly as well as quarterly basis. The volumes that they have been disclosing in the past few months have been really good. They have been either meeting expectations or have been slightly better than expectations. So nothing to worry about, no disappointments over there. The earnings growth is also expected to be quite robust over the next 2 years, as they benefit from higher volumes, operating leverage, and also the benefit of favorable currency, which is containing the yen movement is continuing to be favorable for them.